Hey, what's going on, you guys? It's Marcos. Now, what if I told you there's a 3-digit number out there that has such a huge impact on everybody's life, and it might determine whether or not you can purchase a home or even rent one? It might determine whether or not you can even purchase a vehicle or even if you can put insurance on it. Now, for a lot of you guys that, want to go to college and need to get an education, well, it might just impact that as well. It might be the difference between not being able to qualify for student loans so that you can actually finance your education, or it might determine whether or not you can even get a job after you graduate. Yeah, I know, it's crazy. One 3-digit number actually has the ability to stop all the things I just mentioned and more. Now, I know it sounds a little bit far-fetched, but it actually isn't, because as some of you guys probably know by now, I'm talking about your FICO score, or more commonly known as your credit scores. Whatever name you want to name it, it's pretty much the same thing. And I know it sucks because literally both your financial present and your financial future will most likely be determined upon relying on a credit score. Now, the FICO company makes billions and billions of dollars upon selling both your credit scores to you, to other companies, and also selling your personal information without your permission to basically anybody they want, whoever the highest bidder might be, whether it's banks, lenders, marketing companies, anybody, or whatever you get all the junk mail that you typically get every single day, right? So the FICO company gets away with it, and yeah, you have absolutely no input on your own credit scores that basically determine whether or not you can even purchase a home in the future. But anyways, it seems like things might actually be changing. According to the Wall Street Journal, a new article that just came out this past week, some lenders are actually starting to move away from relying so much on the FICO algorithm, or basically the credit scores, because nowadays they're using a lot more their own personal data and the data that they actually already have with their existing clients. So companies such as Capital One, Synchrony Bank, JP Morgan, Bank of America, and others are starting to use the data that they already have internally on you. So if you have a relationship with a bank such as Bank of America, they're gonna be using more now, your ability of saving money, of making sure that you don't have any overdraft fees and non-sufficient fund fees and things like that to maybe approve you for a credit card. And at the same time, companies such as Synchrony Bank, that they actually do a lot of the loans for department stores and other sort of consumer financing out there. They're actually using even the lifestyle of the borrower. So for instance, the article actually says that sees this as a good thing when somebody is looking to buy a workout equipment, because it's going to lead for positive changes in somebody's life, and therefore is going to make them more inclined to paying their debts on time. In addition to that, financial regulators have been sort of pressing the buttons on the banks to de-emphasize the importance on using the FICO scores when approving people for mortgage loans, while at the same time, both Fannie Mae and Freddie Mac have been working with mortgage lenders and bank institutions for different ways that they can use by using different types of credit for mortgage applicants. Now, back in 2020, there were actually 2 pieces of legislation that were passed by the House of Representatives, and both are in play with the Senate right now. The first one is going to be the Comprehensive Credit Act of 2020, and this one has some really great points. The first one is that it allows for people to actually be able to fix errors on the credit report a lot easier. Some of you guys might know that getting something fixed on your credit report is damn near impossible. For instance, you have to dispute, and by disputing, you mean you have to send letters in the mail and, hope and pray that the credit bureaus are going to actually pay attention to them. So you might have to do it multiple times. Some people might just employ credit agencies, like credit repair agencies, that in some cases might be even shady. They might just not do much and still charge you $150, $200 a month to fix your credit. So, and this could be just for stuff that might not even be yours, just because you have a common name with somebody or a common social security number. It's damn near impossible to fix an error on your credit report. So this bill is calling for that. Now, the second thing also is that it's calling for not allowing employers to use a bad credit score against you for hiring purposes. So just because you have a bad credit score, that does not give them enough of a reason to not extend employment to you. The third biggest thing about this bill is the fact that it's calling also for borrowers of student loans to be able to do something, even if they have bad credit. So for instance, if somebody has a bad credit score, they will obviously not be able to have the abilities to, possibly refinance their loans into a lower interest rate and things of that nature that may actually help them be in a much better position by dropping the payment a little bit in the interest rate. So this bill is calling for something like that. Also, for medical collections and medical payments, there's going to be a much longer wait time if this bill passes, from the time that somebody goes to the doctor and get a bill to a point where that bill goes into collection if it's unpaid. Right now, literally, you can go to the doctor, and if you don't pay your bill within 30 days, typically they're going to slap it on collection. And a lot of time, I see a lot of with my own personal clients, they probably don't even know that they have a medical bill and a medical bill that went into collection. And if it goes into collection, you know, it might drop your credit scores 20, 30, 40, 50 points. That's not a good thing, especially if you're looking to do something big, such as buying a house or buying a car. And some of you guys might not know the difference between 20, 30 points, but it could be very, very huge over something that, you know, might have been able to be addressed before. And finally, the bill is calling for reducing the time of back credit on somebody's credit report. So for instance, it's calling for a shorter time frame of bankruptcies. Right now, a bankruptcy can stay on your credit report for 7 to 9 years. So it's calling for that bankruptcy to be, you know, just only 4 years to be reported on the credit report. That would be actually pretty cool. A lot of people just get shunned away from getting new credit because they've had a bankruptcy nearly 6-7 years ago. Now, the second bill is called the Protecting Your Credit Score Act of 2021, and this one also has some really good stuff into it. The biggest thing is that it's calling for the credit bureaus to actually create a website or a landing page, if you will, a repository where customers can actually come in and check their credit scores and their credit report anytime for free. Right now, in order to get your credit scores for free, you sort of got to go through an application like Credit Karma, or maybe go through your own credit card information. They'll probably give you a free FICO, which honestly is not even worth whatever you're seeing it on, because literally, you know, it could be just a lot different than if you were to go and get a personal loan or a mortgage loan or a car loan. So, you know, with the credit bureaus creating a new website where you can just go and check out your credit scores, that will be huge. Now, that would be something that probably I will see a lot of pushback from the credit bureau standpoint, because they make so much money off of selling you your credit score. If you go over to TransUnion, Equifax, or Experian, you have to pay a ridiculous amount of money every single month in order for you to keep track of your credit scores. Now, the second big thing about the bill is that it wants to also protect how companies are selling your information to marketing companies or even other companies that might be interested on your credit profile. The reason why a lot of you guys, or pretty much all of us, get any sort of junk mail, whether it's through paper or even online, is because companies are always inquiring on our credit report. And both the FICO Corporation, Experian, TransUnion, and Equifax, they sell all of our information to these companies without our knowledge. So this bill, what it wants to do is that it wants to let us know that we have the right to ask for that information on who they're selling our information to. And it gives us the ability to just basically block, even though right now you could actually do that on your own, it's going to make it even easier for the consumer to basically opt out of any sort of marketing and opt out of having the credit bureaus just sell our information for free. So as you guys can see, both on the financial and the government side have realized that over relying on the FICO system is just literally a flawed system that doesn't benefit the consumer, and it doesn't benefit the lender either. Because a lot of lenders on their end, they don't lend to people that have a bad FICO, but that doesn't mean that those are people that literally have a bad history of paying. Somebody can have a bad credit score because literally they might just have run up their credit card bills for 1 month and their credit scores went down by 100 points. I've seen it before. I've also seen somebody that has had perfect credit all their life end up with some dumb collection item that dropped the credit scores 100, 200 points. Even worse, the collection wasn't even theirs. With the over-reliance on the FICO, it definitely doesn't do any justice for the consumer, or it doesn't help the lender either, because they're losing on potential interest dollars that they can be getting. And that's basically it, guys. Thank you so much for watching the video. If you like to give it a thumbs up and subscribe to the channel, let me know what you think. Put in the comment box below, and I will see you guys in the next one.